It's funny. I feel like one of those in-between mistakes were made where I think actually the share count was wrong. So it turns out, unfortunately, that a technicality snagged us in the first one out, where we actually beat the bottom line for what people were expecting. And I think the share count, unfortunately, threw us for a loop. But yeah, we were, as you put it, really happy with the performance of the quarter. Really strong growth year over year, 33%. And on a 2-year basis, which is important given what's been going on with COVID, over 40%. So we've been very pleased with that, and great progress on gross margin, important indicator for us. And frankly, the supply chain position that we put ourselves in sets us up great for Q4 too.
Yeah, some are pointing to the fact that the adjusted EBITDA loss was actually better than expected. So I take your point about the share count and related to the IPO. What's driving the double-digit growth in what has been such a competitive market and environment for sneakers?
Well, I think a lot of the backdrop has been very positive for us this year. So essentially, people casualizing their wardrobe and just in general, the trend behind what we're doing, unlocking a really thoughtful design that's for the on-the-go lifestyle, is going great. When people were sheltered in place, it was a tough time. People bought slippers and maybe running shoes when people didn't care what you look like. And now people are going out and about. Our store traffic is recovering. We have about 35 stores globally. That's recovering really nicely. And our digital is just performing super well. And the team internally did a fabulous job of creating great new products right for the season. And I think we set ourselves up for capturing a lot of this very strong demand, particularly in the U.S. this holiday season. And I do think more and more, Sarah, as we go, our whole mission as a company is to kind of utilize nature and harness that power to unlock something that feels better, feels more comfortable, performs better. And a lot more people are gravitating towards that mission every day. And that's something we're seeing in the data.
Some investors are quibbling with the guidance as well. You expect 23 to 24% growth this year. They see it as conservative, especially given the growth rate that you've seen this quarter. So what are you looking at in front of you as far as how confident you are that you can keep up this pace?
Yeah, the most important thing we're looking at is over the next 5 years, we're calling for 20 to 30% growth consistently. And some years are going to be a bit more. Some years are going to be in the mid part of that. We don't expect to fall below it. And it's just a give and take variability. We're still a young company, but we feel very strong about how we're performing. And I would push people to consider the 2-year look back as something very important until we fully lap what was COVID, which created some very unpredictable dynamics with consumer demand. So once we get through that, and that should be about Q2 next year, then we'll be looking really just back at the 1 year. And currently, we're seeing fantastic reacceleration when you look at it on that basis.
To what extent, Joey, are you facing supply chain issues and problems sourcing some of the unusual materials that you use in your product? And does that help explain why we saw the big jump in inventories?
You know, quite the opposite, actually. What's been interesting is our unique set of materials has buttressed us against what is quite a difficult supply chain environment. We're finding that we don't have a lot of competition in the materials that we use because we're actually typically the inventor of it or co-developing it with one of our industry partners. So our material and supply chain is really nicely intact. Our partners on the manufacturing side have done phenomenally well navigating through a tricky situation with COVID in Asia and some of the restrictions related to that. So we're actually in a fantastic position. We actually think about our inventory as a weapon. So if you look at the sales, that's a backwards looking number. Our balance sheet and the inventory is a forward leading indicator. And we're poised to strike. And we chose to take our advantage supply chain situation to build up inventory so that we could capture what we expected to be very robust demand in holidays and into Q1 and Q2 22. And that's where we sit today.